There have been numerous major events which have taken place already in 2020. Shockingly, this is only the tip of the iceberg. There will be delinquencies and bankruptcies that will be at historic levels. At this time, the data is manipulated because of the government intervention. The longer it goes on for, the more distortions will appear. In the end, this problem cannot be fixed by printing more money or any other action they take. Hang on tight, it's going to be a bumpy ride. You came here for the truth, so let me unveil that for you. I have a very important video to get into today. We are going to talk about the economic circumstances that are taking place. People cannot pay their bills. We have a moratorium on evictions. We have landlords that are knee deep in debt. We've got over leveraging that has been taking place, not just in real estate, in all sorts of different aspects. I'm going to show you some of that today. We're going to look on the financial side first, because I want to highlight what's been happening with the stocks, the stock market, and of course, everything that's interconnected. So let's begin. The so-called Buffett indicator, that's the Wilshire 5000 over the GDP, has now gone to historic levels. It has made a mockery of what we saw back in the year 2000, far surpassing what we saw during the financial crisis. And here we have it today, the most extreme valuations based on so many different measures. I'll show you more in a moment. And nobody bats an eye. They say that everything is fine because this, everything is fine because of that. If you look at what's been happening to the top 5 stocks, it is incredible to see the vast majority of the gains that are coming from the stock market, from just a handful of companies. That's never a good thing. So what do you do in that case? Well, you're not going to go invest in other companies because they're not performing well. So I'm going to put my money in the ones that have been going up. And I'm going to put more money and more money and more money. And I'm going to sell off those other ones that have been performing well. And I'm going to dump my money into the stocks that are performing. And that's what you see, a slowly but surely change in the behavior that's been happening with investors, where there would be a wide spectrum of investments, people trying to get out there and buying more value stocks, trying to look into different avenues, different sectors. No, you don't need that today. All you need to do is buy the top 5, maybe 4 stocks, and you're going to do well. In general, though, when we look at this historically, this never ends well. That's a frightening thought. Broad money aggregates rising sharply. Looking at the USA, the Eurozone, and Japan. This is the growth rate of M2. And if you really break it down, you see how extreme this has been. Of course, the USA leading, if you want to look at it in that aspect, really skyrocketing. And when we compare it to the Eurozone and Japan, it looks like, well, it's not that bad. But even in that case there, of course, it's extreme. We have seen the growth accelerating here through 2020, and we're not talking about the GDP. Absolutely not. We are talking about the growth of the money supply. They are trying to flood the system with this paper fiat garbage, and of course this always has a negative impact. Look back all the way to the great inflation of Athens and everything that has followed up until this point. It is a big mistake to do this, but this is the way it goes. They always try to break the system down so that they can rebuild it from the ashes and have more control. They did so many of these in the past. I have studied it over and over and over again, and it's very clear what's happening now. They don't make these mistakes. These are intentional. It depends how you look at it, of course, and it depends on what level. If you see the information coming out of the news and what they tend to talk about, what people tend to talk about, even in those in the industry, that's one level. But you start peeling back the layers, even one layer deeper, and things start to look a little ugly. Historically, in the United States, nominal GDP growth has closely tracked money supply growth. And then something changed. Well, you look at this, these 2 lines, the darker one is the blended money supply, the lighter one is the nominal GDP, and of course, variations as always, but in general, they move together. And look at today, where we have seen the GDP falling, and then you look at what's going on with the money supply moving in opposite directions. projections. They're telling us that the GDP is going to go in this V-shaped recovery. It's fantastic. Here we are. It's August. That hasn't happened yet. But they have found ways to push the unemployment rate down. I think the last one I saw was 10.2%. It's just hilarious. Look at the continued claims not seasonally adjusted, and you start to paint a different picture. But the GDP growth, who knows? It's always laughable. When we look at the actual information, it tells us something very different. They become very untrustworthy. All right, here we go. S&P 500 valuations. Red-green borders denote metrics trading above or below their historical average. Now, this is from July 24th, and understand that it's gotten even worse since then. What we are seeing here is all but 3 of these, we are currently well above their historical average, and it gives you the percentage if you're interested. Some of them are hundreds of a percent higher, but regardless, we are over that, and that's never a good thing, because historically, when we get out of whack, things tend to come back, and the higher it goes, the harder it falls. That's just the way it goes. There are different measurements on here, but you can see the trailing PE, the Shiller PE. You look at earnings, S&P measured in oil, in gold, and so on. So I just think it's interesting to see all of this information based on different factors. I don't look at just the S&P is currently at this level, or inflation adjusted S&P at this level. There's so much more going on. This is just one way to look at it, but that's 20 different indicators. 17 of them are out of whack. This is just showing you the growth versus value valuations in the stratosphere. We've seen this before, but it's gone way, way beyond that. Anything we saw back in the year 2000, this is sky high today. Value stocks haven't exactly been getting some love. I'll tell you that right now. Of course, because they're looking into the tech stocks, the big names in particular. They're trying to create yield. They're trying to be more of risk-taking in the investment world. This is coming from all levels. They're talking about the Robinhood type traders. Of course, you have the high-frequency traders that are piggybacking off of all of that. They're making the real money. The central banks that have been flooding in, and of course the hedge funds and all of the rest. They see what's happened to the bond market. They know what's going on with interest rates, and this is what we get. Oil capitalism. After the market closes and ahead of the July 4th long weekend, top oil drilling group Noble Corp discloses it's paying out immediately 2020 bonuses to top executives, and the CEO, who is promised an incremental award, gets an extra payment also now. At the bottom, and let's not forget that in late May, shareholders already opposed on an advisory basis the compensation of the company's named executive officers. This is the way it works. These corporations do not work for you. They do not work for the shareholder. They are doing so because they've got friends in high places and they're making the business move. They voted against it and they still do it anyway. We've seen this so many times before, where the government does something, the people are saying overwhelmingly, we don't want any part of that, and they just do it anyway. This goes at all levels. Why? Because there's a revolving door. The people that work in these financial establishments, Goldman Sachs for one, they are intertwined around the government. And people think for some strange reason that things change. Things do not change. On the surface level, they change, absolutely. But at the core, at its root, it never will. They built the system. They control the system. Nothing's going to change that. This is just a few examples. You could see all of the different companies that are going bankrupt and then the bonuses that they've been giving out. It's crazy. Bankrupt companies giving millions of dollars out in bonuses. People are getting screwed over, but those who are at the top still get their payout. And ultimately, this is what I wanted to get to today. It's huge. It's so important I'm glad that you stuck with me until this part of the video. Check this out. This is out of Wall Street. According to the New York Fed, $730 billion in mortgages are in forbearance, and the payments that are being deferred amount to about $6 billion a month, a significant transfer to homeowners that may be used to increase consumption elsewhere or to pay down other types of debt. What's happening right now with debt is undoubtedly historic. You look at this on so many factors. It is historic. We're living right through it. And mortgages that had been 30 to 60 days delinquent were quote unquote cured at record pace. They were brought to current, not because borrowers made catch-up payments, but because these mortgages were modified and rolled into forbearance and thus were once again deemed current and thus cured. A record 61% of the 30 to 60 day late mortgages were thusly cured in Q2. This is the chart that corresponds to that, and you can see the anomaly on the chart. This isn't real. This is the way it's been working, and it's going to skew so many different pieces of the data that we are going to see. They're going to tell us that things are okay. They're going to tell us there's a recovery in many different aspects, but this is going to throw it off big time. This article was actually from July 24th, but they pointed out something that I wanted to talk about here. The worst for US renters and apartment owners is yet to come. Of course, we know what's going to happen. They're going to extend all the programs, will get more funding. They need to push this out further. The deficits are getting worse. The debt is certainly escalating. We know that this cannot be paid back, which is why they want to increase the inflation. And by increasing inflation, they hope to sort of trim a little bit off the top. But it doesn't work like that. We know it doesn't work like that because the rate at which they are printing, the rate at which they are expanding the debt cannot be paid back by a few extra points of inflation. It just can't. 1 in 3 renters failed to make their payment in the first week of July. Nearly 12 million renters could be served with an eviction notice in the next 4 months. I'm not sure if they're going to be able to keep those evictions pushed out forever because these landlords are going to go bankrupt. I'm sure that politically it's better in that case, but there is a ripple effect that's interconnected with that. There's no doubt. This is huge right here. You have to go back to the Great Depression to find the kind of numbers we're looking at right now. There's almost no precedent for this, which is why it's so scary. Remember, I'm not saying that, though I do agree with it. It's coming directly out of Bloomberg. Some companies are able to capitalize on what is happening today. Amazon reportedly discussing using former JCPenney and Sears stores as fulfillment centers. From what I had understood, they are able to do this, but it was actually cheaper for them to just build their own facility and do it properly. But I guess it depends on the situation. Maybe there'll be a bulk discount, who knows? But this means there are big changes coming to commercial real estate. This is interconnected with that. Mall operator Simon Property Group has been in talks with Amazon about turning some of its department store sites into Amazon fulfillment centers. The discussions with Amazon have been underway for months and began before 2020. No bones about it. Ford experiments with four-legged robots to scout factories, saving time and money. They are going to do this, of course, to streamline things, to increase productivity, and ultimately eliminate jobs. This is an article talking about crime that has really increased in the recent past. And why is that the case? Of course, more people are out of work, income is down, stress is up, people are hurting, crime goes up. That's the way it is. Whenever there's a recession, crime tends to increase. This is particularly about LA. There's a chart just below this, but I just wanted to point out car thefts in Los Angeles soared to a record high in the second quarter of 2020. 5,700 vehicles were stolen from April to June. That's up 57.7% from the same period last year. Of course, this is not a good sign. We know that so much is happening today, and this simply adds on top. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, @TheMoneyGPS. If you want to learn how to sell stuff online, you want to understand e-commerce, everything step by step for free, check out the AmazonGPS.com. The financial system is complex, it's convoluted, it's crazy, but if you have the knowledge, if you have the information that you need, you can start to make sense of it. All right, so these two books have everything you need. You can check them out at the link in the description. If you want the audiobook instead, themoneygps.com. You want solutions, you want to know what you can do, how to make change. I've got really good videos in this playlist. It's called How to and Solutions. So much for you to check out. Click it, I'll see you there.